Good afternoon, ladies and gentlemen. This is Clueless 8, and this is a midday quick recording I wanted to do because there seems to be a lot of confusion, which obviously is the case given the mixed signals that are being purposely being generated by algo HFT programs on days like today to confuse and get traders out of trades and all kinds of good stuff. All right. So let me just show you very quickly, and this is very clear to understand. I can't do this on Periscope; it's a little too detailed as to what I'm seeing here. This is just one of my charts, mind you. Now this is at 1 hour time frame on the Trading View channel. Okay, and on that, these stows, at least on the trade view side, are not oversold yet. But this is what I'm seeing here. And I'm watching these moving averages. This blue line is the 5-day moving average, okay? You can start to see that the 5-day moving average is starting to curve down. We have a gap fill here that I've shown a zillion times, and that gap fill is around 195, and the upper end of the gap fill is around 196.46. Look, this is a market that's driven by machines. They know what traders are doing, what bets they're placing, and large institutional traders too. Okay, and those are the ones which really matter. So if those guys are going in there and heavily shorting or heavily going long based on what they think is going on, then the algos will go ahead and confuse people. I mean, Apple's up 64 cents here. Amazon's down $10. It's obviously a mixed market. You got our win, which is a real winner, up more than 11 since I posted it. You got EOG up 2%, and lots of reds and very few greens there. This is what's going on technically. This gap, to get people out of this constipated confusion, if you want to look at it that way, I would say that we need to basically come down here, test the upper end of the gap, have some resolution whether we're going to move forward or whether we're going to fall back into the gap, in which case it would be perfect because then we would engage this orange line, which would be extending up, which is fantastic. That's the 34-day moving average and the 50-day moving average. Now keep in mind here, right there we have a crossover right there, and that's very positive. Okay, so if you want to look at these moving highways, as I like to explain it, these moving highways are moving higher. So the market is on a constructive fashion as we go towards the middle of the week. Okay. Also keep in mind that we have the first 5 to 7 days, as I've mentioned several times, where new money enters the market in the form of pension fund inflows, institutional funds, which put money in for the 401ks and all that good stuff. So you have that bit going. The other bit going is obviously oil. There's a lot of this new money that's coming in, going into some of the most depressed sectors for the fourth quarter, because that's obviously the best value, and that's in the oil and natural gas and commodity sector. So that's putting a bid under the market. From a technical standpoint, this is not a market that you can just heavily short and just go away. Okay, we had a massive move. I explained it clearly that what happened on Friday wasn't a joke. All I'm simply doing is making 60, 70, 80% on some hedges. It's really as simple as that. We are quite overbought, no question about it. And it also means that we can stay overbought for a couple of days before the market decides to do what it needs to do, which is go up, hit levels that I've shown before. 1 second here. It's very annoying. Hold on. Okay. And this could be looked on as a bull flag. This can be looked on as a bull flag, which breaks up. Now, there's a logical place to go, and that logical place is the upper end of the Bollinger, which is around 201, and or engage with this upper channel. Okay, these are the channels that I drew. That's around 201 also. So the possibility of this market going up another 100 to 150 points and heading towards 17,000 is a very real possibility by the end of this week. So keep that in mind. So I think that sorts out the confusion. The perfect scenario, which is never perfect, okay, is that we get oversold or get oversold a bit. We come down, test the gap, and we move from here, right? But you know what? The algos know that, so they're just doing what they need to do. Bottom line is, this is still a constructive format. We have a crossover right here on the 34 and the 50. It's a 1 hour chart, and that's a positive, okay? Any type of pullback and this side, I believe for now can be bought as long as this 3450 lines and are moving higher and not curving down. You start to see the 3450s curving down like this, all bets are off. We're going to come down and test the lower end of this Bollinger at 190 again. That's 1900. That's it for now. I think that should sort out the confusion. All these things, the vortex indicator, easing back a little bit and the negative one moving up a little bit, it really doesn't matter right now. Right now, you got to follow this pattern and then just stay calm. Have a little hedges if you want. Simple. I mean, those things are the first batch I took out. Made some real decent money. What was it, like around almost 80% or something like that, or more? Because I cost average down. It didn't feel good when they were going against me yesterday, but so what? In the meantime, we have enough stocks here which are doing extremely well. And I've highlighted them, and we'll just go from there. So bull flag, crossovers, all this stuff has to be watched. Gaps, okay? I don't know exactly when this gap's going to get filled. This gap will get filled, okay? I can assure you that. And but whether it's going to happen today, whether it's going to happen on Red Wednesday, I don't know. So whatever the case, use your best judgment. And again, I can't answer questions every 3 minutes, okay? So I think this should help clarify a lot of things that's going on. In the meantime, if you notice, this is a large triangle, and if we do break out of the triangle, okay, then like I said, we're going to go up here, and most optimistic scenario would be up here, or even testing where we failed from, which was around 202.82. All right, so around 2030 on the S&P. So all those upside targets are still very much in play right now. All right. It's the best you can get, one of the best services out there. I'm telling you, middle of the day, giving you what you need to watch. This gap, by the way, this gap has been filled. As you can see, this is where we are right now. So this gap has been filled. Whether the lower gap gets filled or not, I don't know, and I doubt it, given the strength in the market right now. Okay, but then even if it does, it's going to be very quick, and it's just going to come down, test it, and then move forward, in my opinion. That's it. Thank you for listening, and I hope this really helps, and keep making money.